How's everybody doing this morning? I hope everybody's just wonderful. All ready to go? All right. We have had the ADP non-farm employment change came out at 8:15. Looks like the number was a little bit lower. I'm not sure anybody in the markets didn't manage to respond to that too much. We have revised non-farm productivity coming in right at 8:30, and a revised unit labor cost, which that one shouldn't amount to too much. But at 10 o'clock we have factory orders, and that might. Sometimes that does make a little bit of difference, and particularly now when they're all kind of concerned about the marketability of U.S. goods because of the strength of the dollar. So you might want to pay attention to that. The indices have not done too much in the last few hours, and oil is in a very tight range. But it looks like the Canadian dollar is headed up. It doesn't have much else place to go, so it may pull the crude oil contracts up with it a little bit. We'll have to see. It looks like bonds may have a little bit of movement to the downside later, so if you're a bond trader, I would pay attention to that also. This morning we have crude oil inventory report at 10:30, and I put this big sign on our brand new wonderful chart. So be very careful of that this morning. The API report came out, and the general thought is they may be underestimating the reserves that are in storage at Cushing. So I would do not be in a crude oil trade right at 10:30. That might end poorly for you. And you never know which direction it will take. I have seen that inventory report come out where there's way more oil in inventory, and you would think the nature of supply and demand that would cause the price to go down, and it just skyrockets up. So sometimes it can respond a little differently than what we might think it will. Give the bus driver a chance, and he'll take a direction. Just stand back and let that time hit. This morning, this is coming off of our red ice line. It did about what is that, about 7 o'clock, and it may continue on up, but this is the bottom of a serious amount of the volume. These ranges, these ice ranges, are where 80% of the volume occurred in the prior session. And yesterday afternoon, when we were going into the close, there were well over 600,000 contracts of crude oil trading. It was huge amount of volume. So kind of watch the volume, and as that comes into the market, which is likely going to occur right around that inventory number, this may take off in one direction or the other. Right now, I'm going to try and watch this chart. I've traded a little bit off of it. The advantage to this thing that I see is that it doesn't require as much precision in determining your entries. I believe the template has the trend catcher already on it. I removed it from mine because pretty soon I get so many lines in front of my face I can't see what I what will give me uh, a good decision-making capability. It's a little bit of an overwhelm for me, but I do refer to these on this chart, and I'm going to leave that on for a little while uh, because I have learned if everything else is lining up and this puts up an entry, it's very accurate entry. Right now, as long as these lines are these price bars are above this dotted or dashed black EMA is what this is, then you should have upside movement. So we can all kind of practice with this. Keep it in demo, especially unless you're an experienced trader. I would not be trading crude oil inventory live for a while till you have a little experience with it. So I will see you all at around noon, and we'll go back over the trades and the entries and exits off of this new chart and try to get used to that as we carry on. This has been my view this morning. This is Wednesday, the 2nd of November from my world. I'll see you at noon. Thanks.